You can wish all you like. If you're not willing to work for those wishes, you'll never see them. Wishes without work become worthless. Don't wish for better results. Work for better results. Don't wish for less problems. Work until your problems disappear. Don't wish life were easier. Work harder until life gets easier. Work on yourself until you get better. Then life will become easier. Don't wish you were stronger. Work until you get stronger. Fail and persist until you get stronger. Persevere until you get stronger. Don't wish the government or your boss was better to you. Set your life up so you don't have to worry about other people to create the life you want. No more excuses. It's time for responsibility, accountability. Ask yourself, what can I do better? What can I give more? Can I plan better? Can I learn more? Where can I improve? It's time to step up. You want the next level? The next level requires a step up. It's a step up in all areas. Mentally, emotionally, physically. You cannot reach the next level of your life until you are prepared to step up. Don't wish for better results. Work for better results. Don't wish for less problems. Work until your problems disappear. Don't wish life were easy. Work harder until life gets easy. Work on yourself until you get better. Then life will become easier. Don't wish you were stronger. Work until you get stronger. Fail and persist until you get stronger. Persevere until you get stronger. Wishing is weak without work. Work for what you want. Work on yourself. Earn the life you must have. Earn the life you must have. Wish for it, but never forget to work for it.
Hello, everyone. How are you this evening? How's everybody doing? For a Wednesday night, a little Hump Day Wednesday action here. How's everybody? All right. Here tonight, for those of you who don't know me, my name is Heather. I work here in Trading Rebels. I'm part of the Giving Tree trading side. And I'm here to help you with something very simple. I get a lot of questions about people who aren't in the room every day. They can't, they just can't be there. They have full-time jobs or, whatever it is. You can't sit there and watch your charts. You're not the day trader. Totally okay. There's a lot of us who, don't necessarily have time to just watch it all the time. Now, obviously, I'm in the room all the time, but I hear you. You want something that you can, some kind of a system that you can look at maybe the night before, take a look and see where things are moving, and then play that play. Have maybe an alert set up so you can go in and buy it. Whatever the case is, set up in a contingent order. Those things actually work pretty darn well. Contingent orders to say, hey, if these moving averages cross, I want to buy X amount. There's all of these things that are available to us that we don't really take advantage of. So we're going to talk about how to swing trade and really dial into making it a system that has very strict rules. Now, what I want to start out with is, because we're using moving averages to learn about this swing trading, I want to make sure that you know that you do not have to use my moving averages. It doesn't matter what moving averages you use. Now, some people find that, okay, these moving averages work better for me, or I think these are more profitable, and yet you'll find someone, no, it's got to be these. No, it's got to be these. And I'm here to tell you that it's not so much the moving averages you pick. It's how you use them. And I will tell you the same thing about any tool you use, whether it's an RSI or a MACD or a VWAP, whatever study you use, it doesn't matter. What is important is that you use it consistently and you obey the rules that you write down. And oh, there you go. Write down your rules. Now, it doesn't mean you can't change them. You know, it doesn't mean that you use them for a little bit and then all of a sudden you're like, yeah, there's something that's not quite right. You got to tweak it in. Absolutely. But remember that what works one day may not work. You may not think works another day, or we get into that, oh my goodness, this person does this, that must be the way to go. 2 days later, wait, this person does this, no, I'm going to follow that. Pick something. Just pick something and stick with it. Allow it to work a little bit. Now remember, markets, if they get super choppy, moving averages can be very difficult to follow. I understand that. So we are going to just pick a very simple moving average. We're going to use it on the daily chart. I will tell you, moving averages work really well on lower time frame charts as well. But I'm going to stick with the daily chart and refer to a weekly chart. These are very simple. If you use TOS, so I use Thinkorswim for all of my charting. I do not trade out of it, but I do use it for all of my charting. And I have watch lists set up that will automatically populate, and I use the EMA 3, so the 3 exponential moving average and the 8 exponential moving average. Now, I prefer it to be, either up over the 20 or down over the 20. Doesn't have to be. You decide how many parameters you want to put on that. Mine is set up here for using, if we're going up, the 3 crossing up over the 8, I want it to be over the 20. If the 3 is crossing down below the 8, simple. I want it to be below the 20. Now that 20 is a simple moving average. I do not have it on this chart though, because I know if it's in this list, it's going to meet that criteria. And I really like to have clean charts. Now I know this one looks like a hot mess right now, doesn't it? I hear you. These are the S&P futures, and we can see here that we pushed up on those S&P futures, making new records today again. Right? We've made so many new records in a very short period of time here. But okay, so here we are looking at the S&P futures now. Something that I kind of like to kind of go back to, moving averages are really cool. But I find that sometimes if you're playing for specific names, what if you get news, right? Anybody there with me on BABA? I know some of you were. Right? You were with me on this. Got into it. No kidding. I could not have timed this better. I got into it right before the news, right? That it's, we're not going to be able to invest in it. We haven't heard from Jack Ma. The Ant Group's not going to be able to be an IPO. Could we have been hit with any more bad news at one time, right? I swear I timed that perfectly, right? If only I knew that news was going to come out. Anyway, so we had that news, and when you look at a chart, you look at a specific name, right? The news, you don't know if it's going to get an upgrade or a downgrade, or someone's going to come out and say they're going to short it. You just don't know these things. So if you don't want to trade a specific name, I'm always going to refer you to an ETF. It's the basket of stocks that is in that sector. So let's say I really like to trade AMD, but maybe just worried about news or whatever, so I would just flip over and trade SMH. Always look up your ETFs. ETFs move a little bit more smoothly, right? Because they're not subject to earnings, all of the earnings, right? They aren't subject to all of that individual news. So, and that's what we're going to focus tonight. We're going to focus on ETFs. I want to share with you real quick a little cheat sheet that I will plug it in here for everybody to see, and I will attach it to the bottom of the video. A little cheat sheet of ETFs and both sides of the ETF, whether you want to go long or you want to go short. This is not my little cheat sheet. It actually says cheat sheet for traders, right? How they make it so easy. But it shows you the symbols, right, that you would look at depending on how you want to trade. And here when they say 1x, right, we have that on both sides. 1x, 2x, 3x. Those are how it's leveraged. Is it just a single, it's, up or down? If it's a 2X, obviously it's double, it's heavy, right? And so you have to be very careful. I tend to want to not trade anything out here in the 3X especially, right? I feel like that is extremely volatile, but if you are very, very diligent, to each his own. All right, so check this out. I will post it at the bottom of this video. And for those of you that are here this evening, I'll just go ahead and post it in here for you in the room for everybody. Okay, so nice little cheat sheet. And I'm going to tell you, go ahead and refer to that. It just makes things pretty easy. Now, if you are familiar with these pairs, there's a long and a short. This one does happen to be a 3 ETF, but it's pretty simple, and it gives a very nice view of what we're going to look at tonight. So you want a swing trade, and you want something that you can get in, and you know where you want to get out, where you want to, maybe you want to hold. Maybe that's a lot of us kind of get into we take our profits so quickly and it keeps running, and then we're like, oh man, we left money on the table. I hear you. It happens. But what we want to do is not have that feeling. We want to follow a rule. So that's what we're going to do here tonight. We're going to talk about moving average crossovers and how to get in them. Okay, so I'm going to start very quickly. I'm going to pull up a drawing tool. Everybody knows I'm not very good at the whole drawing thing, but here we go. Okay, the green is a 3 EMA, so it's a 3 exponential moving average, and the red is an 8 exponential moving average. Okay, so I'm going to use Soxel, and I'm using Soxel for a very for a good reason. You're going to see the comparison here in just a minute. Okay. So what we're looking for, it's pretty simple. We're looking for a crossover. It sounds pretty silly, right? Because can't make it much more simple than that. Seriously, we're looking for a crossover. In this case, I'm going to look for one going up, okay? So we find that here, right? This is where we find the cross. So what we want to do, I've set up these watch lists, and this is a tip from a mentor of mine. And she did this. She told me that she has her set up to actually show the 2 and 8 crossing up, because it gives you a heads up to the 3 crossing. So it gives you just a little bit of advance notice. So probably right here is where this one would have said, hey, take a look. Right as the cross is beginning to happen. Now, I will warn you, do not anticipate the cross. Just don't do it. Don't anticipate the cross. Wait for it to happen, right? And then when we see it happen, I like to let the market settle out a little bit. I always let the morning kind of pass, the first 30 minutes, because there's a lot of volatility, people selling, people buying, whatever. Maybe we have a gap day, whatever it is. Okay, let that kind of settle in, and then come back and see if you still have the cross. What we want to see is a definitive move, okay? So around that 10 o'clock time frame, we can come in and look and say, okay, yep, we are moving up. Everything looks good. I'm going to go ahead and hop in. Now, what's wonderful about that is you don't have to sit here and look at it all day. You know what you have to look at? Maybe check in before the close and say, yep, okay, we're good. We're still on a cross up. Even if we don't have this is a more bullish candle. Maybe we have kind of a plain candle like this. We're still on the cross up. So we don't want to sell until we get a confirmed cross down. So we're going to say we got in right here. We're going to sit in it. Even this red day, right? This kind of freaks us out. But we can see that this line here, it didn't cross down. Now, how many people would have sold right here or right into this day and like, oh my goodness, it's going to cross down, and then for it to just keep going? And that's what we're going to try and avoid. I know it's hard and it doesn't always work, but what we want to do is wait for the confirmed cross down to get out, or, if you want to go ahead and take your profits, go for it. I prefer to wait for the confirmed cross. So I would come in and look the next morning. It's crossing down. That's when I would get out. But you can see here we just came in together and we squeezed, right? So that is nice. So we're going to come back here and look at what we think is going to be a cross. So we're coming way back here. Okay, see this? And we had this little dip down. And this day we're coming to look and we're like, oh, you know, that it's crossing up. But can you really see the difference between the red and the green line right here? See how close they are? That is not a very definitive move. In this case, what I would do is I would wait and say, you know what, I need to see a little more air. We see the next day, we're like, oh, whew, we didn't get in. That's perfect. I got by without losing anything. But then the next day we come back in. We're like, oh, it's starting to cross up. This is the day that I would get in on this day, right? Because I want to see that there is space between that 3 and the 8. Now, some people, as soon as it crosses, they hop in and they just move with it. That is, to each his own. It really depends on your tolerance. I would have waited because I like to see that little bit of space. Now, let's say we hopped in there, right? I would have hopped in this day. I'm going to go ahead and color that candle in a little bit, right? That's the day I would hop in. And I would be in there, right? And here we are again, another one of those very squeezed. It was not a confirmed cross down because although our 3 came in to the 8, the next day that we would look for that confirmation didn't happen, right? So I'd still be in. And then here again, we are just sitting here, right? Still be in. Here we go. This day. Now, here is where we get into pretty big angry candle. Would this make me get out? If I got in here, and I'm just going to say we got in, let me change my tool real quick. I'm going to say that got in here. Now I'm just going to go ahead and pull that at like I'm going to say 223.75. So now I've ridden this, taken the roller coaster ride up. I see this angry candle and it's pushing hard. We're building volume. Would I stop out? I would look at that, even right here at 275. I'm like, you know what? I'm okay with that. I am okay coming here from 223. And as we start to move below the 8, looks like we're going to close below the 8 at 270 maybe 268. Am I going to take that? Absolutely. Absolutely. Now, if you follow it, let's say we didn't have a big angry candle that came in, had a smaller one, you wait. You wait for the next morning to get out. That very simple. And I know it sounds so very simple, but something that is really easy is that set your alerts. So we get in here. Where am I going to set my alert? I'm going to set an alert for a crossover. You can do that really easily. Right here in TOS, if you right click, you can hit create alert. And you can set it for a price. You can set it for, you can set these things for pretty much anything you want. So you want to set it. You're going to make sure that you have your sound, send it to your text however you want to let you know that we're going to cross the other way. It's very simple. It seems too simple, doesn't it? Now, why do I talk about SOX L? So SOX L is the long side of this. Well, because watch this. Look what happens when we flip it the other way, right? It's just the opposite side. Now, what is really important when you're looking at these kind of pairs, because in a market that isn't choppy, you can get in one and then as soon as it crosses, sell the one you're in and get into the opposite side and be willing to wait. Right now in the markets, it's kind of hard to want to get in on a short side. What I would recommend because here, this is just the SPY, we keep, even if we have these pause periods, we just keep moving up. So in this case, right, or we could have it if we were, just going down, right, whichever direction you're going. If you decide to take an ETF to the long side and you start to get that cross, right, or something that you're like, you know what, I'm just going to go ahead and take my profit. You will never go broke taking profit, by the way. You're going to go ahead and take your profit. You're looking at the short side. It looks like it might cross. You know what? Definitely wait for that confirmation. And remember to honor it if it doesn't continue for you. And that's the hard part. I have talked to several people who will work with this strategy. And because they went the opposite, so they were in one way and they got out. They went the other way, but it didn't really work. They didn't want to take the loss, so then they got back in the long, but they're still holding the short, or vice versa. They're in the short and they're, holding the long. That is a very dangerous position to be in. I will tell you, be in only one, whether it's long or short at a time. It really helps to preserve your capital, and that's really what a lot of this is about. It is preserving your capital and making smart decisions. All right, so it seems pretty simple. It really does. But it's much harder to execute. So I really, really encourage everybody, if this is a strategy that you are interested in, work it on some paper first. Make sure that you can identify the actual crossovers, right? Because if it's really close, maybe just say, hey, I'm going to wait. It's okay. There are a ton of ETFs out there. It doesn't even have to be a pair ETF. I pulled up the financial sector ETF because it is doing well. We're coming back into a squeeze. I actually entered this the other day, actually over here, of course, because why wouldn't I buy the high? As we're coming back together, I didn't buy it on this strategy, but this is a great one to watch for a 3-8 cross. Go through your charts. Find out, do you just like a particular sector? If that's true, then, watch the ETF for that. So here, the IBB is a whole index fund, right? This has been beautiful, especially since we've been working through the COVID vaccines. So, you get in, look, and this is an easy one to see where you could easily get flushed out, right? So you had this cross on a gap. You could be in it all the way through here, and you start to squeeze. And even though you come down a little bit, that's where it's kind of a gut check. Are you willing to sit through it until you get the confirmed cross? Here in this case, we just continued to go up. So really, right up until about this 154.60 area, you might have still been in it from, and I'm going to take it from the high here, maybe the 140, right? That's a $24 move right there if you're willing to be patient. And again, when I can't stress enough on this. If you are going to trade these crossovers like this on the daily, don't sit there and watch them every day. Let's say you can be in the room, but you want to do these. Don't sit there and watch them every day. If you're watching maybe the 5-minute candle or, 1-minute candle, 30-minute, whatever, that's not what you want to do. What you really want to do is look at it in the morning, right? And then maybe before the close, if you can, right? That's when I would take a look at any of these and see where you want to be. Set your alerts. Always set those alerts. And that's pretty simple. So question here, is there any scan that has been finding more good trades than others lately? I would love to say yes on that. I'm going to have to go with a whole lot of no. So the market, different areas have been, kind of surging, and then there's been so much rotation. Sector rotation used to take a long time. We're talking, this wasn't something that happened in a day. And now it's something that can happen within a matter of hours. So I don't find that in particular. I like to look at some seasonalities and kind of gauging where earnings are going, right? So XLF hasn't done the best here right through earnings, but they're forward guidance. We're looking at a a rosier picture moving forward. And so that's kind of how I am going through and just checking a lot of those ETFs here. And they work great if you trade in an IRA or some kind of a retirement account, because then you're not in and out. And I find that it's a little bit more calming. So question here, do I check the ETFs to see what sectors to trade in during the day? Not really. Well, I'm not sure. Let me make sure I answer that correctly. During the day, am I looking for sector rotation to trade? No, not at all. Not in the ETFs. I kind of run through some of my favorite ETFs, and you'll find that you'll have certain areas that maybe you just like better, or maybe you're more tuned into the biotech side. Maybe you're more tuned into financial or technology, whatever it is, and just start to follow them. But I think if you're just starting this and you just want to start looking at ETFs, pick a few and then add to it later, but pick a few and start watching how they work with the market, right? You want to see if you're in, technology, obviously, you're really going to have to move with watching the cues, right? Precious metals, Alan, yes. If you're watching whether it's gold or GLD, GDX, yeah, absolutely. I have found that those in particular have been harder to trade lately. All right, so I'm going to look at the gold ETF. It has been much harder because we get very gappy, right? And then the swing has been violent. So I've stayed away from some of those golds for right now. Now, do I think that those will come back and be great traders? Absolutely. Great question. So Cindy's asking, how far out do I look for an expiration date? So these are good for obviously equity, right? If you want to do equity in them. Expiration, when I look at these right now, I would definitely give yourself a 3-month. 6 month is even better. But give yourself a 3-month berth, so that it can kind of do its thing. And this isn't, when you're doing these, this isn't one necessarily where, personally I like to take my profits at 10% normally, or at least part of them. But when you're dealing with these, I would be much more apt to scale out, and I would be very apt to roll it if it's green, right? Maybe take a little bit out and then roll it into a further expiration if it's working, right? Because if you find yourself in a situation like this and you didn't really give yourself quite as much time as you thought you might need, why not? Why not roll it and buy the time? Then it allows you to sit in something like this before doing this, right? So minimum three. One thing I will say, if you're going to play options on this, something that is pretty helpful is to look out several months and see where your buyer is sitting. Where is that open interest or current day volume sitting? And if you see a lot of players out at the 6 versus the 3, then that's probably where I would go play. I like to be on a busy playground, not the one where it's just me bouncing the red ball against the wall because no one will play with me. So, absolutely. Any other questions on this? This is pretty simple. I know, and it seems super simple. As we start to move forward here in 2021, I am going to start looking a little bit more into this for more so for IRA accounts, because I trade in IRA accounts, not just my day trading account. And I would, I'm going to start, really looking at these, doing some videos on them, and getting into some of these, and making sure that I tell you that it's, that it's long-term, why I'm doing it, that it's a crossover. And again, you don't have to work these just on the daily. Weekly, if you switch over to weeklies, and I do have the 3-8-20, or just the 3 and 8 cross on weekly, I do have that scan. if you work off of weeklies, say you're super busy, this is awesome because look at, so Soxel is, again, it's a triple, and I'm using it more for example because it's a pretty chart. Soxel crossed, gave me a good confirmation. I probably wouldn't have gotten into it until right here. So this is the June 1 chart, right? But I'd still be in it, right? Probably would have taken a fair amount of profits out. But let's say I even take it at the top part of this candle when we filled the weekly gap here at 191.30. We'll just say 191 because it's easier, right? Where are we right now? 650. So that, but it does take a lot of calm, right? That is the point of it, is that you can get in, you can look long term, and you can just roll your options out. Now, not all of these will have great options, right? You want to find the ones that have some liquidity in them. Otherwise, you're really just paying for the market makers to write an option for you. And we don't necessarily want that. So make sure you have some decent liquidity and volume in those options. All right. Sound good. And Alan, it's the semiconductor. I just pulled it up. I mean, seriously, semiconductors have been amazing. So that's why I pulled this one up. And this is the long side. So SOXS is obviously the short. So, right. But it doesn't have to be an ETF. I mean, you can use it on most stocks. I mean, this is the weekly of Apple. This almost hurts to look at. Being an Apple fan. I mean, look at this. We had our confirmed cross way back here at 71. We'll say 71.10. Right? Now, we did have the split in there. I know that. But, this has all been adjusted. And we're at 130, 132 today. Right? So, it's a very different mentality than day trading or even short-term swing trading. These you look at as more of a medium, I think more of a medium term where you want to hold them for several days if you can. And even weeks to months. That's what we're looking for here. And that's why equity in this works really well too. This isn't just all options. This is, equity, to have equity in your account, especially like I said, I trade in an IRA often. And I like having my equity in there, and I like having the ETFs in there. So don't look at it just as an opportunity for an options trade. Look at it as an opportunity just for investment, period. That's what I like to do. Doesn't mean that everybody has to do, but that's kind of where I'm sitting on it. Cool. And remember, let's say you don't like the 3 and 8. Okay. You know what? You don't have to use it. I'm going to ask you to use something that you're comfortable with. Maybe you like the 10 and the 20. Some people trade the 20 and the 50. And those being simple moving averages. It's totally fine. It just, you have to find what works for you, what makes you comfortable, and then you run with it. All right. So it's pretty simple. And remember, you don't need to make it complicated. We see that a lot, where you take something that's really simple and you manipulate it so much that you break it and you make it completely complicated. And that's not what we're trying to do here. We are trying to do something simple, something that you can use, set your rules, write your rules, decide what moving averages you like, and then stick with it. That's all. That's what we're trying to do here. Remember, KISS. Keep it simple, silly, because calling people stupid is just not very nice. Exactly. All right. That's kind of it. Any questions on that? I'm going to take some questions afterwards, but I'm going to stop the recording because I like to keep things very pithy. Although I've gone 30 minutes and that seems really long. All right, well, I'm going to go ahead and stop the recording. I want to thank you all for joining me, and I will hang out here to take questions if you have any. And I'm going to make a couple other videos. So, all right, thank you all.